What's going on, everyone? This is Stephen Place with Insiders Exposed, and today we are going dumpster diving. I have a biotech stock that has not been performing well. And there's been a lot of biotech stocks that the whole sector has just sucked as a whole. Like if you go look at XBI, which is small cap biotech, it's continuing to break down and it's looking very bad. But what we have seen over the past about 2 to 3 weeks are some key insiders who have been, for the first time for some of them, purchasing shares out on the open market. And when I dug in, I saw the narrative and the potential shifts in the fundamentals that certain deals have brought forth. And I think that's what they're positioning for. And I think that, it's worth a shot. This is one of those names where it's trading at a very low price. It's either going to run out of cash and go to zero, or it's going to see a massive squeeze. You can basically treat it as you would a call option where, if it doesn't work, it doesn't work. But if it does work, you get many multiples on your total risk. So let's go ahead and hop over and just take a look at this beautiful long-term chart. So this is a stock that has traded with a range between 20 cents and $4. And, it's seen some squeezes, it's seen some pumps, and that in and of itself is actually very good for me, because I would like to anticipate some of the pumps that do happen, and you look for that squeeze, and then you get liquidity and you take off a serious size of your position. So that's what I want to do. That's not what the insiders can do, though. Remember, insiders who buy have to hold their shares for at least 6 months, or they have to forfeit any of the profits that they have. Okay. So this company, it is effectively a single product company until recently. And with single product companies, if you don't get product market fit, if you don't get enough growth, then you can't make any money. And they've been struggling to get to profitability. Now, the thing that happened last month is that they acquired another company. And this company has a lot more products, and it's in a slightly different branch. Instead of one body part, we're looking at another body part. And a lot of it is over the counter, so you don't have to worry about FDA regs or things like that. And it does have a sizable e-com footprint, which means that they're spending money on ads, and they're probably turning a profit on those ads. And that is what the CEO in a letter recently said that they expect will get them to profitability. Okay. Now, in order to buy that company, they had to basically do a private placement. They had to dilute the shares even more. Now, the total share count is still pretty low, but it's probably going to significantly increase as convertible shares. I'm sorry, not convertibles. Some warrants get exercised if we do see higher price movement. So that all of that said, normally that is, that's just normal for penny stock land. That's just kind of the business that they're in, and it's not necessarily the most optimistic kind of business. But they're putting money where their mouth is. So the two people who were involved in being bought, so the acquirees of the company that was brought in, they started purchasing some shares. And then the CFO purchased shares, and then the CEO purchased shares. So this is what we call a cluster buy. When you have multiple insiders buying around the same time, that indicates that there's the potential for a turnaround or a shift in narrative or things along those lines. So you can actually see it when we zoom in on the chart. So the acquiree share purchases started happening at the end of November, beginning of December. The CFO, the chief financial officer, added 55% to his overall position. And then yesterday, while the stock is getting absolutely truck sticked to the downside, the CEO is saying, you know what, now's the time. And he actually went out and bought a pretty decent chunk of shares into that. So right now, that news hit the wires after market yesterday. It led to a spike, and we saw a little bit of a pullback pre-market, but it is holding its bid. So the play here, I think, is to just pick up the shares. They're very cheap. You treat it like an option. You run full risk. So if the thing goes to zero, that's just a function of your position size. Yet if it starts to run like it has in the past, it's a quick double. All right. And again, you don't have to be a long-term investor. You can trade around this a little bit and you can get out into liquidity spikes and things like that. And that's what I'm playing for. And that's what I am showing to my clients inside of Insiders Exposed with our research. So if you do want access to that research, if you want access to our portfolio and everything that comes along with it, go below this video. That will get you access to our training webinar so you can get full indoctrination into our system, and you get all of this free training before you even join. We want to make sure that you're fully informed and educated when you do become a client of Insiders Exposed. So once you do that and go through the training, you'll have a special offer at the end of that video. I highly encourage you to join. That's all I got for today. Have a great day.